Hey everyone, welcome back. Hope you're having a great day. Today's Friday. It's obviously the weekend is approaching. Not much going on as far as crypto news right now. We have two stories obviously that I want to talk to you guys about is the SEC going after Coinbase for their lend product. What does it mean for the rest of the space? And then we also have Solana as far as why is it pumping right now? And is it possibly going to be overtaking Ethereum anytime soon? But first, let's take a look at the charts here. Get something new for you guys today. So we got the heat map here going on. You can see BTC, Ethereum, everything is pretty much down. Kind of looks like a mixed day as far as what's up and what's down. I'd say it's 50-50. Obviously, the big boys are obviously down. Some of the other coins, Ethereum tokens are up a little bit. So let's get into the charts here really quick. So Bitcoin is at 46,166 or 156. It keeps changing. It's right now below our support line here, which was 47,000. So we're going to keep an eye on that, see if it pops back up, but it is above the 50-day moving average, which is good. It's below the 20-day moving average, which isn't good. One thing we want to keep an eye out for is obviously the cross again, where we have the 15 to 20-day crossing that could lead us with the potential to go down even further. Right now, the RSI is holding good. So next couple of days are going to be important for Bitcoin, especially to tell whether it's going to go back up or back down. I think after this correction that we've had here, I think it's going to take a while for it to go back up. Right now, we might be in an accumulation phase. So yeah, we'll keep an eye on it. Next one is Ethereum. Ethereum is also right now, kind of hovering right around that 20-day moving average. There's really no guidance as far as which way it wants to go down. Right now, it's kind of sloping down a little bit. It may test the 50-day moving average before bouncing back up. So we'll have to see in the next couple of days. Our prior resistance was here at $3,341 roughly. It's staying above that. It looks like if we take a look at here on this, yeah, so it's kind of like bouncing off of that right now. So that is our kind of support right now, the 3340 mark. That's our support. And then our resistance obviously is at the 3900 mark. Obviously going to take a while for it to go back up. Our side is good too. It's at 50, so it could go either way right now as far as up or down. The next couple of days, weeks are going to be obviously telling for the way that things are going to go forward. Cardano is also at 247 right now. It is in this kind of weird trend right now, or line. It's basically on the daily. It is just floating around these two lines here. So we'll have to see if it bounces above that mark, which is between 247 and 252. It has to basically get out of that rut, and then once it gets past the 20-day moving average, we'll be good to go back up north. Litecoin is also bouncing off of the, the 50-day mark on the 50-day trading averages, and resistance, it looks like, is the 20-day moving averages. So no clear path either on this one as far as which way it's going to go. RSI is holding flat right now, as you can see. So is the price in the last couple of days. Dogecoin is at 24 cents right now. It is going down a little bit as well, so it may test the 200-day before bouncing back up. It's obviously below the 50 and the 20-day moving averages. RSI is low, so we may be in like an accumulation period for all these cryptos. Stellar, same thing. It's a little concerning to see Stellar below the 250 and the 20-day moving averages. Had a nice wick up yesterday, but it came back down. We went up to 36 cents, so we tried to pump it a little bit. Wasn't successful. We'll have to see in the next couple of days, like the rest of them, see what's going on. Solana had a nice pump the day before, yesterday. It went up to 216, reached a new all-time high. But then it obviously pulled back yesterday, and today it's pulling back now as well. It is down 3% on the day right now. And from yesterday's high down to today's, where we are right now, we went down approximately 15% in value. So we'll get into an article about Solana as far as why is it pumping right now. So we'll get into that. And then the mining stocks. Mining stocks, Hive is right now pre-market down 1 penny. Bitfarms is neutral. Hut 8 is up 6 cents. Marathon is down 13, and then Riot is up 12 cents. So we did an update on Riot's mining capacity and their HODL report. We did that yesterday. So take a look at that report if you're interested in that. And then we did Bitfarms, I believe it was, and Hive reports the day before that. They also provided their August operations reports. Let's take a look at the market cap here really quick. Market cap Bitcoin obviously number one, 7 days down 6.1%. Ethereum is down 10.3% on the 7 days. Cardano is down 16%. Tether, don't care. Binance Coin is down 14%. Solana is still the only one that's pretty much up 42%. It's at the number 6 spot, so it overtook XRP. And it leads XRP now by $3 billion in value. Dogecoin is number 8 now. Polkadot is number 9. And everything else here is pretty much down except for Solana for the week. So if you invest in Solana, congrats to you. You're still up for the week. We'll see where it goes from here. All right, let's get into the first story with SEC. So SEC's handling of Coinbase Lend signals sea change for U.S. crypto lending. So we got a little FUD in the market right now. Brian Armstrong posted some tweets a day or two ago about their basically exchange with the SEC is for trying to get approval for their land product, where you can basically lend out your cryptocurrencies and make a certain percentage on that. So here's a quick take with Coinbase CEOs lamenting. With Coinbase's CEO lamenting a recent back and forth with the SEC, crypto lending as a whole seems to be in the regulatory crosshairs. The SEC doesn't seem inclined to extend the non-security status of FDIC-insured bank savings accounts to non-FDIC-insured crypto banks. So crypto lenders may be facing the same fate as ICO issuers. So we saw that back in 2017. ICOs were a big thing in 2018. And then the SEC kind of cracked down on it, where people were offering initial coin offerings on their businesses, trying to get people to invest in them that way. So that's where the SEC cracked down on it. Brian Armstrong, the CEO of leading crypto exchange Coinbase, took to Twitter on Tuesday night to criticize the Securities and Exchange Commission's handling of Coinbase's proposed land product. Coinbase Land is in principle a high-interest savings account for USDC, the USD-pegged stablecoin administered by the Center Consortium, backed by Coinbase as well as crypto startup Circle. Similar products already exist on the market. Gemini Lend is another that already exists at a competing U.S. exchange. Crypto neobank BlockFi has seen a range of state securities regulators train their sights on its interest account offerings. However, federal authorities in the U.S. have not yet entered the public field to this extent. According to Armstrong, Coinbase sought to get the SEC's approval before launching in a few weeks. They responded by telling us this land feature is a security. Okay, seems strange. How can lending be a security, said Armstrong? Yeah, that seems strange to me. I mean, it shouldn't be as a security. You're not. I think the only way they could see it as a security is possibly like if you invest in a company and then you get dividends, right? So that's kind of where they might be looking at it that way. A subsequent blog post from Paul Gerwell, the firm's chief legal officer, provided more legal details. The SEC had sent the firm a notice that it intends to sue them if they launch their new yield product. As Gerwell, I'm sorry if I'm pronouncing this wrong, wrote, Coinbase's lend program doesn't qualify as a security, or to use more specific legal terms, it's not an investment contract or a note. Customers won't be investing in, so this is important, right? They won't be investing in the program, but rather lending the USDC that they hold on Coinbase's platform in connection with their existing relationship. So basically, if you have USDC, you put it on the platform, you basically allow Coinbase to then lend it out to other people or other businesses, things like that, and you get to share in interest on that. So right now, the banks, when you have money in your savings account and things like that, they use that money to lend it out for people to buy cars, mortgages, businesses, whatever it is that they need, right? You don't get anything from that. You get 0.01% on that, or whatever you could get on it. So that's where I think, being able to do this through Coinbase makes a lot more sense for people, where you could get up to 4, 5, 6% on that. You're at least getting above the rate of inflation. So He continued to criticize the SEC for responding to the request by directing the firm to SEC versus Howey and Reeves versus Ernst & Young. Those Supreme Court decisions respectively flashed out the terms investment contract and note, which the opening of the 1933 Securities Act defined as securities. The Howey test became famous among the crypto community as the SEC's justification for intervening in the initial coin offering boom. The Reeves test is both newer and newer in crypto and spells potential trouble for lending products. Outside of a narrow list of exceptions, it classifies all notes as securities with the burden of proof of exemption on the party offering the note. Coinbase seems to be looking for crypto-specific guidance, operating on the belief that the new technology justifies new guidance. I would agree. The SEC, meanwhile, maintains resolute technological neutrality. Its guiding documents date to 1993 and 1994. Yeah, we didn't have any computers back then. We didn't have the internet. We didn't have all this stuff. So they better get their act together and update for the 21st century with the technology that we have now. This is arcane. This is ridiculous that they even have this. Or going back to these dates. Some are seeing Coinbase's feud with SEC as naive. Philip Maustakis, an attorney with Stewart and Keisel, and formerly of the SEC's enforcement division, told The Block, "There's plenty of case law on what kinds of notes constitute securities and what kind do not. That analysis does not change simply because the new technology is utilized in the issuance of a note. In the existing law, notes are presumed to be securities." So that's kind of strange that you have to basically figure out a way to go around these old laws, which don't have anything to do with the newer technology. So that's weird to me. That's strange. Similarly, Anderson Kill attorney Preston Byron tweeted that yield products are securities. They differ in no material respect from an unsecured bond. They just don't use the name. That's okay. That's weird to me as well. I wouldn't call it a yield products are securities. Are securities, was it your bank account then, your savings account? Is that a security as well? That just seems weird. Attorney and freaking crypto critic Francis Coppola noted, oddly enough, because of its history, the U.S. doesn't like high-yield deposits to be unregulated, especially when the marketing target is naive retail investors. The interest payments rely on extremely risky speculative investment, and the FDIC is not involved. I think let the people make their own decision. We're not all little babies here anymore. I know the government likes to think that we're all babies. We can't handle risk or anything like that. They got to hold our hand in everything. But yeah, let's continue on here. If the SEC has decided to treat crypto interest accounts and lending products as non-exempt notes or corporate bonds, those classifications would incur a whole different level of disclosure. Well, let's find disclosure, put it out there, let people read it and make their own decisions. Cease and desist letters from state authorities to BlockFi already had the industry worried. The SEC, which has federal authority, bringing Coinbase, a publicly traded firm, to heel as a new expansion. Indeed, Armstrong lamented that Coinbase had been unfairly singled out for being proactive with the regulators. Maustakis disagreed with Armstrong's argument that uneven enforcement was a sort of injustice, telling The Block, the SEC does not have unlimited resources. It has to bring enforcement actions that have a programmatic impact. That is, enforcement actions that will grab at the attention of public in such a way that will change the behavior of the public going forward. Okay, so you're a big company. We're going to go after you. We're going to let the little guys get away with what they want to do. I can see their point on that, but you got to be consistent throughout it, because otherwise you're not making fair rules and fair interpretations on everybody else. So if it applies to somebody, it's got to apply to everybody else. Get the rules updated, get everything done so we can all move forward and work in this industry. The move, however, was not totally unpredictable. SEC Chair Gary Gensler has been clearly centering his crypto lending platforms in his speeches. We have heard that alongside decentralized finance, the nature of DeFi makes it tougher to scrutinize, not that the SEC isn't trying. A representative for Gemini declined to comment on the significance of Coinbase's saga with Gemini Earn. The new development could also provide significant for Celsius and Nexio, two international competitors to BlockFi. On a longer horizon, the SEC stated focus on DeFi could encompass lending protocols as well. Alex Christian, founder and CEO of lending platform DataMint, told the block, "I've reached out to the U.S. regulators for years to no avail." This is important, right? Some regulators are keen on optics. The optics, absent legal action or guidance, lend arguably to market manipulation and scarce tactics. A representative for Coinbase declined to go on record with the block. When reached for comment, Byron said that if the issues BlockFi and Coinbase are having with regulators are any indication, I think it is likely we are going to see more activity in this area with the passage of time. He further noted that Congress needs to step in to protect crypto lending in a fashion akin to bank lending. I agree. We got to get something on the books here for them. Mustakis went even further, ominously referencing the SEC's pursuit of ICO issuers. I think that what we're going to see unfold in the context of notes is what we saw unfold in the context of investment contracts here in March. Okay, two different things though. You're investing companies. This is basically you're lending or staking your coins to have the Coinbase, Gemini, or anybody else lend out your coins and go from there. So something to be mindful of, obviously, if you're investing in Coinbase or anybody else like that, or if you have coins that you're staking and investing in BlockFi or anybody else, so something to be mindful of. Okay, next story is kind of long, Solana, so we'll try to make this as quick as possible. So I just wanted to kind of go over why Solana is pumping. It's a pretty long story. We'll try to go through this as fast as possible. So Solana, what you need to know about the skyrocketing cryptocurrency. Solana, a cryptocurrency that launched to relatively little fanfare in April 2020, has recently been on a tear. Its price rose roughly $1.50 in January 2020 to more than $2.08 at time of writing, making it the sixth largest cryptocurrency in the world with a market cap of $61 billion. It's down a little bit. Obviously, we saw that earlier. So what is Solana and is its outstanding rise in price warranted? Let's read on. What is Solana? Solana is a blockchain platform for decentralized apps. It's an open source project maintained by Geneva-based Solana Foundation and built by developers at San Francisco-based Solana Labs. Okay. Solana rivals Ethereum, which is currently the largest decentralized apps platform by promising faster operations and lower transaction fees. It is a POS, proof of stake blockchain, which makes it more environmentally friendly than proof of work blockchains such as Bitcoin. Its native cryptocurrency is also called Solana and has ticker SOL. So what's so great about POS? In a decentralized blockchain system, a lot of computers, nodes validate transactions. A bad actor might want to add a bunch of nodes in order to take control of the network. You can thwart that by making computers running in the network work hard by solving a math puzzle, which in turn makes it costly to attack the network. That's proof of work. It's effective, but the network can end up consuming a lot of electricity. But you know that with Bitcoin, obviously. Another way to do this is to make the validated nodes on the network have something at stake. In Solana's case, they need to stake SOL tokens. And you're seeing that with Ethereum, Cardano, some of the other ones. And while validators on the Solana network also consume power to operate, their power usage is far lower than that of Bitcoin miners. Both proof of work and proof of stake mechanisms reward validators or miners for their efforts. Bitcoin miners get BTC, and on Solana, validators are rewarded in SOL. It's worth noting that on the Solana end users don't have to run a validator node to earn rewards. They can delegate their stake to a validator who will pass the rewards on to them for a fee. Bitcoin's proof of work mechanism also functions as a sort of clock for the network, making sure all the nodes on the network can agree on the correct order of transactions. In proof of stake systems, this isn't as easy to achieve, so Solana uses a technology called proof of history, which it claims helps the network more efficiently determine the time of transactions. This and other innovations, Solana claims, make it more secure and perform better than other blockchains. Most modern blockchains use some form of proof of stake, but Solana's biggest competitor is Ethereum and Cardano, which is going live with their updates soon, I think the 12th. But still relies on proof of work, though it is in the process of switching over to proof of sale, which is true. From a technical overview of how Solana works, check out the video above. You can check out the Solana's website as well. From the end user perspective, Solana is a place where you can use SOL to interact with various decentralized apps. Ethereum has that coming, or has that already. Cardano has that as well. So a lot of people are in the space. Most of those are tied to finance, such as platforms that let you lend and borrow money, trade crypto, or invest in various assets. But there are also apps that let you buy and sell NFTs, or even find a dating partner. Yeah, never heard that one before. That's a new one. Check out some of the apps that are available on Solana here. Why is it better than other cryptocurrencies and blockchains? All the above sounds like a lot like Ethereum, and indeed Solana is most easily described as an advanced Ethereum competitor. There are a lot of more apps on Ethereum, so why switch? Ethereum has long been plagued by high fees for transactions, gas fees, we know that, which sometimes skyrocket into hundreds or even thousands of dollars, especially at times of high network congestion, mostly because of NFTs and the NFT craze. Solana has a larger theoretical throughput, meaning it can handle more transactions per second than Ethereum, so the fees are currently extremely low, typically costing 0.000005 Sol, or about 1/10 of a penny. In practice, once you have a wallet that can hold Sol and Solana-based tokens, such as Phantom or Solette, you can interact with numerous apps there. You can trade one token for another on a decentralized exchange such as Radium. Excuse me. You can buy an NFT on the Solana Art Marketplace. Whatever you do on Solana, you'll pay the small fees mentioned above, which sounds pretty good compared to Ethereum. It can't be all good, right? So what's the bad on it? Solana is technically still in beta. This isn't uncommon for blockchain projects, nearly all which are experimental in at least some regards. Cardano is still an experimental, right? Cardano is just basically launching fast and hoping people will be able to catch up and they'll be able to provide updates quickly. Same thing with Ethereum. Bitcoin is a little bit more slower moving, but it's still, you could say beta. I mean, it's only been out for, well, Bitcoin's been out for a while, so I wouldn't say that it's beta. I think it's been proven pretty well. But it's worth noting that the project is still in beta if you're going to invest or build an app on the platform. Solana pays a price for its speed. The validator requirements, validators are computers that help run the Sol network, are very high. While anyone can theoretically run a validator node on Solana, the cost of building, running, and maintaining such a machine will drive away many users. This theoretically makes the network less decentralized as more power is concentrated in the hands of fewer users. We'll have to obviously take a look at see how much power you need to run these validators, these machines. This could cause other issues. For example, validator nodes that aren't powerful enough to handle the network activity could cause slowdowns and instability and that does occasionally happen on Solana. Okay. Finally, Solana simply isn't as battle tested as Ethereum, which has been live since 2015. There could still be undiscovered bugs or issues that could affect the performance or security of the network. That is true as well, something to be mindful of. So why is Solana pumping? Solana price rise has been astounding. Someone who has participated in the Solana ICO, Bitcoin offering a way to crowdfund a project by selling project tokens, was able to buy Sol for 22 cents. The price per Sol is now 208, a 95,000% increase. That is quite well. If anybody got in on that, congrats to them. To be fair, other promising Ethereum competitors, including Cardano, which we talk about here often, Polkadot, Dfinity, Terra, Polygon, and Avalanche, have also increased in price tremendously over the past year or so, but Solana's rise has been something special. One reason for the growth is the fact that Solana has the backing of popular cryptocurrency exchange FTX, which has launched several Solana-based projects. Almadea Research, the same firm that backs FTX, is one of the biggest investors in Solana alongside Andreessen Horowitz and Polychain. So Andreessen Horowitz, obviously, is a big investor. Another obvious reason for the transaction fees, which are lower than most competitors. Then there's the total value locked, a metric that counts how much value has been locked into the project on the Solana ecosystem. According to a DeFi Llama, a website that tracks decentralized finance projects, Solana is currently the third largest chain in terms of TVL, with a total of 7.9 billion locked into the project on its network. So where do I start? To do something on the Solana network, you'll need to buy Sol. We know that. What's next for Solana? This is what I wanted to get to. Solana is but one competitor in the world of decentralized app platforms, each with its strengths and weaknesses. It shows a lot of promise, has burgeoning app ecosystem, and continued support from FTX and some of the biggest venture capitalists in the space. It has a long way to go to catch up with Ethereum, but it's well positioned to grab a decent share of the decentralized apps market. Anyone who's interested in decentralized apps and the blockchain space should at least dip their toes and try Solana out. So there you have it. And that is why Solana is pumping. Obviously, a lot of backers behind it. That's in a way that's a good thing, but it's also a bad thing because I could be manipulating it a little bit, pumping it up. But obviously, there's some FUD going on. We're seeing it with the SEC. We're seeing some good news for Solana, but we're also seeing a lot of red today as well. If we look at it right now, if we look at the chart here, we can see Bitcoin actually went into the green a little bit. So maybe we'll have a reversal on the day today. We'll have to see what happens. Ethereum is still down 2.2% so far right now. So that's all I got for you guys. I hope you guys enjoyed it. If you like this kind of stuff, obviously subscribe, helps me out, and hit the like button. And I'll see you guys in the next one tomorrow. tomorrow, Saturday. So have a good weekend, everybody. Bye.